Good afternoon, everyone. Thanks for joining us today. It is Wednesday, January 8th, 2025. I want to remind you that derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This information is shared for educational purposes only. So today we have a combo for you. Essentially, we're going to spend, the first 10 minutes or so talking about a few things that I've carried over, and I'm sure John, who's with us today, he's our head trader at Convergent. Something I've carried over from my prop days just to set me up for the year. It's kind of a ritual. We'll cover that for 10 minutes. And then we're going to jump right into the AMA. So I highly encourage you to just type your question, whatever question you have regarding trading, in the chat box in front of you in the GoToWebinar. Hopefully next time we'll be on Zoom. And just type it in and we'll hit it up in the questions section. Of course, as I'm going through the content here for the first 10 minutes, if you have questions about that, you can ask that, but hit us up in the chat box in front of you and we will get those answered. JC's here with us and he'll reply to those he can, and the rest he'll throw at us. Let's get started. So again, type your questions in the live chat window in front of you. So let's do a quick year in review, because the topic here is setting yourself up to trade right in 2025. We are very, very focused on trade right, the process of trading, whereas we find that most folks in the industry are focused on the outcome of trades. And those of you who've been around for a while know that we're big proponents of not concerning ourselves too much with the outcome and really focusing on the process. So we use a basic process for reviewing and setting goals at the end of the year. The last 2 weeks of the year are just ideal for this. This year is a little bit different. We had volatility all the way through, but in general, the last 1 to 2 weeks are we go into a grind up, generally the Santa Claus rally, or we just sit sideways and volume's anemic. So it gives us a lot of time to be able to just reflect on the year. It's really important to take a moment to reflect on the year. We start by reviewing our monthly statements. I like to go and just grab the monthly statements from my clearing firm across whatever clearing firms there are, bring those monthly statements together and just look at how the outcome in this case has been. When we go through our monthly statements, what do we see? Do we recognize all the charges that are there? Is what's shown there reflective of how we think we did? Are we trading a lot? That sort of thing. And once we do that, we look to answer the question, what are 3 things? So I run through January, February. Okay, what happened in March? What's going on in April? I had a lot of volume. It's pretty dead in June, that sort of thing. Crash and burn in August, whatever. What's going on? And then I'll put notes right on the statements as to what things look like that month if needed. I can reference a journal or my electronic notes and see how that ties in. But we're not really focused on one thing. We're not focused on one month. We're just looking across the board how things have transitioned. You start to see some correlations, some patterns. So what are the 3 things we could have done better through the year as a reminder of how things went for the year? What are 3 actions we must take to see better results this year? Are we quick calculation off the monthly statement? Are we doing well enough per contract? Are we doing well enough per trade? That sort of thing. List out the 3 strengths and weaknesses after doing the monthly review, statements, notes, if need be, charts. list out the 3 strengths and weaknesses in the areas of technical assessment. How has your technical assessment been? How has it been for you? How good of a job have you done in assessing the bias on a daily basis in your trading plan? How about your execution in your trading plan? Have you obeyed your risk? And is there an emotional attachment? What is your emotional process? Are there strengths within your emotional process and weaknesses within your emotional process? We want to come away with this by looking at where we were and what we've done for the year. And really, I'm not so focused on numbers. Oh, I made X amount, or I pulled X amount, or whatever, I lost X amount. It's really just looking for the level of activity we're seeing, the number of products we're trading, all of that's listed in those statements or in your journal or notes. Then once I figure out the kind of the bigger picture stuff, I like to go and just look at my charts and my trade setup. You know, is this as good as did this serve me in 2024? If not, I'd like to get rid of whatever didn't serve me. So if I have, let's say, a weekly VWAP line or something like that, and I hardly looked at it, it's gone. If there's a chart that has some statistic on it that I never look at, it's gone. Just my goal is to try to go back. It's almost like a spring cleaning, is to go back to as simple as possible. I do this once a year. There's tendency to add things like John and I talk about markets in the Convergent chat room, and you know, he shares his charts. Sometimes I might notice something. He uses a 2-day VWAP. I might throw that on there and start observing it. But if I don't hang on to that, if I don't pay attention to that on a day-to-day basis, then I'm just going to delete it at the beginning of the year. I might add it back in because John's talking about it and it seems to be getting a response. But at the beginning of the year, I want a clean slate. Okay, so that's the next step. So the review, the monthly review, assessing your weaknesses and strengths in those 3 areas we talked about: technical, execution, emotional. Then clean up your charts. Just get rid of as many lines and indicators and charts, entire charts as possible. And then the next step is, okay, now we're back to our baseline. We're going to set our intentions for this year. I don't like using resolutions. You know, people talk about New Year's resolutions. Don't like resolutions because they have this finality to them, and they really set us up for disappointment, right? I'm going to lose 40 pounds this year. It's not really something that's conducive to a process. It's more of, again, it's results oriented. So I set an intention and a plan instead. So based on the information I've gathered on my assessment, I just set an intention based on my metrics. My intention is to get to cut my errors down to 1 per week by April 1st. So that's what I'm shooting for. And then that gets carried over until that's done. That gets carried over forward until it happens. And I understand that it's my intention to do so, and it's a process. I intend to increase my expectancy by 1 tick by June 1st. Okay, what do I need to do to do that becomes the next step. So that's setting an intention or setting a goal that we want to go for. A quick disruption here before I forget. There is a deal going on for Convergent Trading. We cover a lot of this stuff a lot of the time. We do the trade talks every week and study halls and so on. So we want to make sure you have an opportunity to check out the service. So we want to mention here that you can get 25% off on the first quarter and set yourself up with a Trade Right program for immediately by using the promo code TRADE 2025, TRADE 2025. You can get more information by pointing your browser to go2ct.pro/trade 2025. that gives you 25% off on a quarterly membership, which includes the Trade Right program. Okay, and be sure to sign up by January 19th for this discount. After that, it goes away. Again, go to ct.pro/trade 2025, promo code trade 2025. JC, if you can drop that in the chat, the link in the promo, that would be great. Okay, carrying on, the pitfalls. So back up 1 second to this. As far as the intentions, it's great to have intentions. The next step is to start coming up with the tactical steps to get to that intention. For example, if I want to improve my expectancy by 1 tick by June 1st, which seems like it's very little effort, but gaining 1 tick, depending on volatility, gaining 1 tick by June 1st can prove itself to be challenging because the losses really pull that average down. The expectancy is really an average, and our next step is to start coming up with tactical steps to really accomplish that goal. So tactical steps could be, let me list out my setups, and I'm going to focus on my A setups. My A setups taken under the right circumstances, under this current volatility, I can compute what to expect out of those setups. And what that means is I cannot just be taking middle of nowhere scalps, impulsive trades, because that'll drag down my expectancy and it'll make it very hard for me to get there by June 1st. So just creating little tactical steps to get there is important. The pitfalls, the last part of this I'll cover, is the pitfalls to look for. So for 2025, a few things that we would look at as pitfalls. First being trying to improve results by repeatedly jumping from method to method, or by following what someone else is showing, right? So this is something that just repeats itself all the time. We see people jumping from influencer to another influencer, then I'm going to go and do ICT, then I'm going to go and do order flow scalping with Joe Schmo, and then this is a big pitfall. There's constantly marketing and there's constantly information coming our way to entice us into trying something new out, right? It's the grass is always greener on the other side. This is a massive pitfall for traders that we've seen. You need to master a method that is independent of some indicator that you have to get from a specific person. So don't jump, just master one thing. Not knowing what our current performance is, but still setting big goals for 2025. Okay, I finished the year flat for 2024, so I'm gonna set a target. In order to make something, I gotta aim high. So I'm gonna aim for 200 grand net by the end of 2025. Well, setting a goal without knowing where you were in 2024 and what needed to happen and what needed to be done better is really not realistic. And we see this regularly, like, hey, my goal is to make 10 grand a month. Okay, what did you make last month? How about the 6 months before that? What's the average? How about the prior year? Why should this year, just because the calendar ticked over to a new year, why should it be so much better? Base your goals and your intentions on the past. Build on the past. Small steps, atomic habits. Setting performance goals, but not breaking down the steps required to get there. This is the part that I just talked about. You're setting these targets, expectancy of 1 tick or whatever, without really knowing what is impacting those goals, or figuring out the steps you need to take, the small steps you need to take to be able to get there. Using high leverage, this is a huge one. Using $500 margins for the ES or $1,000 margins for the NQ. The risk of ruin is really, really high when you do that. Try to de-lever your trades so that you can sit still and calmly and manage a trade from a peaceful mindset rather than leveraging up, $1,500 for 3 ES and watching it evaporate in one trade. Avoid high leverage or avoid low margins. This is not a good place for you to be. Not tracking trades daily through a trade log or performance software. If you're not tracking what you're doing, there's just no way for you to figure out what you need to do going forward. So you're pretty much a ship without a rudder. There's no real direction to what you're doing because you don't know where you were, where you are, so that you can set a course for where you want to be. Not knowing or recognizing repeated errors. Errors are the bane of my existence when I was in prop. Traders repeating errors was a pet peeve. It's the most aggravating thing. Errors cost a lot of money. Make sure you recognize and are addressing the 6 key errors that we've often talked about. If you want that information, just let us know. But make sure you really focus on your errors. You could have the greatest plan in the world, but if your execution is riddled with errors that you don't recognize, then the improvement's going to be hard. Let's hit up some of your questions. John, how are you doing today?
I'm doing well, FT. How are you?
Good. Okay, JC, do we have any questions we should address?
We do. The first one is from Grace. Every year, futures contracts are thinner and thinner. So is futures. Will futures dry out and die and be untradeable soon with everybody obliged to trade CFD?
Okay. I have the opposite view, and I have the stats to back it up. There are more and more traders coming into futures. The volumes in futures are exploding. The volumes in options are massively exploding because of 0DTE and so on. A lot of activity is moving towards derivatives, not away from it. And actually a lot of activity is moving away from CFDs, not towards it, because CFDs are in Europe, these are not available in the US. CFDs are under more and more scrutiny. The environment right now, the political environment right now is towards deregulation, so maybe they'll be fine, but as of right now, when you trade a CFD, you're trading not on a public exchange, you're trading on that broker's platform. They're the exchange, they're the market maker. There's a move towards more regulated exchanges, and that's what we're doing in the futures. The futures are getting more people. I mean, if they're not, why would Robinhood launch a futures platform? Why would Webull launch a futures platform? Why did the crypto exchanges like Coinbase and Crypto.com buy futures exchanges? It's coming towards futures. It's not going the other way. The reason you'll say futures are getting thinner and thinner, and they are. John, do you remember, how thick the S&P was in maybe 5-10 years ago? Do you remember how heavy it was?
For sure. I mean, it's less contracts traveling a smaller span of prices. Now ES trading at 6,000. There's a lot more volatility, so it might feel like they're thinner, but I mean, there's the data is there. There's more volume, certainly. So
yeah, there's more volume, and like in 2018, every price had 3 digits up, 100 or better. I remember in 2006, 7, that region, it was like some of these prices had 1,000 contracts at each price in the ES, and now it's 20 lots and 30 lots and 50 lots and 100 lots in the ES. In fact, when I look at the book and I see anything that's 100 lots or better in there, it really stands out, like right here. Of course, this is after the cash close, but this is pretty typical of what we see. Most of the time it's double digit, it's thinner, and there are good reasons for that. There's the volatility is a lot higher, so people don't have to trade as big. Like, trading a 6 lot now is the equivalent of trading a 24 lot back in 2007. It travels a lot more. The ranges are wider. We expect about 67 points of range in the ES. And I'm sure, John, maybe you were in the Euro dollars then, but I don't know if you remember days where it would just go like 8.5 points, the range for the entire RTH session.
Yeah, I remember that. I mean, I wasn't in the early 2000s. I was in the Euro dollars, but we had days like that, more recent than then. I mean, since 2018, I can remember having some periods when we had a much tighter volatility. And that's what I've said that pretty frequently around CT about how this time, we're at all-time highs in equities, but it's not the all-time high trade that we're used to of just a grind with a small range. Like there's good ranges. It's pretty tradable in my opinion. The S&Ps, year start off a little rough, but there's a lot of opportunity in the S&Ps when we have ranges like this.
Yeah, we're getting really good rotations. Anything else, JC?
Yes, we have what's recommended margin for day trading NQ, 100%, 50%, 25%, and asking for a convergent style of trading.
What do you think, John? What's a reasonable percent of exchange initial margin that people would use?
If you're trading the NQ, you should trade the full margin. I'm just chuckling because you're a broker and you kicked this one over to me. But I would recommend the full margin. Yeah. Oh, okay. I would recommend the full margin, especially for something like the NQ. I personally don't trade the NQ. It's a little too volatile for me. And the tick increment we've talked about a lot. It's too tight for me. But I would certainly recommend the full margin if you're trading the NQ.
Yeah, just as a point of reference for those who are not familiar, the full margin on the NQ currently is $24,420. On the MNQ, the micro, is a tenth of that. So 2,442 is 100% of initial margin. And my recommendation is 50% intraday. 50% is about where you want to be. So that's about $1,200 per contract on the MNQ. I would not suggest trading the NQ. It's just really a big contract now. If you start to move below 25%, you're really asking for trouble, because although people look at margin like it's a cost, margin is not a cost. Margin is a measurement of risk. Margin is the exchange calculates how much you need for an X standard deviation move on a day. So they look at the range of a product for the day on an X, like I think it's 4 or something like that, standard deviations, and that becomes your margin, right? And so that margin, as the volatility increases, that margin gets higher. As volatility decreases, the margin gets lower. And if you stay with a $1,000 NQ margin, which is like 8%, which is actually less than that. That's like 4%. Then what you've done is the exchange has said, hey, the volatility is way up here, and you're still holding on to that low margin. You're just going to get destroyed. I mean, the risk of ruin is just tremendous. So I would strongly suggest that you stick with 50% if you can. If you cannot, it's an indication that the product you're trying to trade is just too big for your account balance. If a worst case scenario, it's 25%. But I know, like, for example, at edge clear below 25% requires special approval. So we need to see that the person knows what they're doing. You know, the goal is to keep people out of trouble. So be smart. Trade a smaller product. You know, move to MNQ, M2Y, or something else, MYM or something, to avoid that big a product. What else do we have, JC?
We have one for John. Is the trader bite coming back anytime soon? I think they're referring to your
Talking about the opening swing.
The trader bite or the opening swing is there every day for Convergent members. I don't know. I'm sure we'll do public stuff as the year goes on. That's something that we're talking a lot about, how to get some more public exposure. But I mean, I do essentially that video every day for Convergent. I usually do, you know, sometimes more videos. If you're in the AP group, I usually share a lot more stuff, sometimes trade walkthroughs and things like that. So they're happening. It's just happening internally to Convergent. But we'll see. I think that we do want to do more public stuff, so we'll see how it goes. But if you want to see it every day, join Convergent.
Yeah, here's today's. I just want to comment about the fact that John had just come back from robbing a bank with that hat.
Yeah.
And so decided to do his video.
It's really cold in Pittsburgh, everybody.
Yeah, yeah. There's this. The weather's been terrible. Very
All
cool.
right.
Trader bites. Not doing a trader bite like the old trader bite. Not doing that. That took a lot out of me to be able to do every morning, and I only missed a handful a year. It requires a lot to do those. It's a lot of effort. So we're focusing within Convergent, the people who are part of the community. That's where our focus is, because we can go back and forth and we can talk to people. We've gotten to know a lot of the members who are there, and it's just there's more return. You know, selfishly, there's more return on the effort in the form of being able to communicate and recognize what the person is going through, with not only the day-to-day communication with members, but also the group mentoring sessions and the trade talks, and seeing members kind of pop up again and again. So it's part of why we moved away from that format, because it kind of doesn't end when you put it on YouTube.
All right, we got another one. Happy New Year's, guys, from Xavier. How do I figure out expectancy and how to get better by one tick?
Okay. Expectancy is, or really more technically or statistically speaking, it's called the expected value. And it really is just looking at your win percent multiplied by the average size of your winner. That could be in ticks, it could be in dollars, preferably not in dollars or points. We prefer to use ticks. So we look at the average amount you win when you win. We look at the average amount the percent of trades that you won on. We look at the percent of trades that you lost on, your percent loss, and the average amount that you've lost when you did lose. And the formula is win percent times the average win minus loss percent times the average loss. And that gives you a number. And the reason we don't just use the straight up average is because scratches end up having a zero amount and they get kind of thrown out, so you can't count those in the formula. And so that's how you compute it. You compute it, it's available online. It's also, if you go to convergenttrading.com and go to the glossary, you'll find it there as well, explained in there. So convergenttrading.com, go to the glossary, you'll find an explanation in there. And how do you improve it by a tick? So first, you have to have a really good way to track the outcome of your trade. So you have to have a really good trade log, and you're looking to extract more ticks on your wins than your losses to improve your expectancy, period. So even if the win percent goes down, the average win stays, makes up for it. And it requires you to be a lot more selective, not on your trades, because we don't know which trades are going to work and which aren't. There's just, we fake ourselves into thinking we do know, or we can feel it. But it's about going and selecting the setups that give you the best return. That's the goal. And you can improve by more than a tick, but it's really hard, because what happens is, as you take losses, the number goes, you know, if I have 3 10-tick wins, my average is 10 ticks. But if I take one 10-tick loss, now I have what used to be 30 ticks on 3 trades is now 20 ticks on 4 trades. You see, the average drops so hard. So 1 tick seems very little, but it takes a lot to get there. Okay.
All right, let's go on to the next one. Could you explain the accountability partner setup that's available at Convergent?
There's an accountability board. So here's the accountability partner system. I'm just showing you my thing here. There's a video on how to use the system and how to select partners and what you should do with partners. And then you have partner listings. So these are members that have filled out a profile and looking for a partner, and they put in, you know, what products they trade, what they're looking for, what their method is, what time of day they trade, and so on. And you can chat with these members. You can directly contact these members, or list yourself as well. You can filter these out by, you know, I want an NQ trader, and it'll go and it'll only show you NQ traders and so on and so forth. So this is just a way of connecting people. And then from there, we provide some templates and of course these videos, as I discussed, to be able to make the most of it. You know, having a partner is one thing, but making the most of that partnership is also difficult, because there are personality issues. There's you know, some people are serious, some people are not, and so on. And you want to make this process efficient. You don't want your accountability partner meetings and reviews to be just go on and on and on talking about golfing and whatever, unless you're turning it into a social thing. You want it to be 20 minutes. Hey, here, what was your plan? How did you do? Let me look at what you did. Hey, explain to me why you took this trade. It doesn't seem to work with your setups. That's what you're looking for in an accountability partner. Or it could be, hey, John, you know, I had the right targets, I had the homework, I had it all, and I was supposed to get long, and guess what I did? I fought the market by selling short all day. You know, I just need to vent about this. And it's just because it might be a 15 or 20-minute venting session, but the goal is to come out of that with some action steps. What are you going to do different next time? You know, what, and someone who's a trader can help you a lot more than, you know, going to your significant other and talking to them where they're going, yeah, but there's no real understanding of that background. Or some random stranger on a Discord somewhere. It's a lot harder to, you know, the accountability works over time. Like, you start to really understand the person's personality and so on, and that's when it becomes effective. What do you think, John? I mean, accountability, having an accountability partner, what do you think are the biggest pluses from doing that versus just being on your own?
Well, I mean, the biggest plus, without a doubt, is the fact that you have to admit to what you did every day. You have to say what you're going to do, and then you have to admit to what you did after the execution hours are done. And that is so important, because, you know, take it from me, I'm sure you know as well, it's very easy to just be in your own world if you're in an office at home. You know, people in prop offices don't have this problem. It's unbelievable how some of the mental issues just don't exist in prop offices. And it's because of the social pressure to conform that happens in a prop office. That's my opinion. And I think to be successful as an accountability partner, you have to create that same social pressure to conform. Somebody else knows what you're trying to do. They're expecting to hear from you at the end of the day. You respect this person. You don't want to let them down. They're not going to let you down. That's what you need to build. I would really, for people that are new to it, I'd really advise against getting too social. I've seen that happen with groups. You don't want to, your coworkers. You want to know each other and be pleasant, but it's not social hour. That can eat up time real fast. But that's my
Yeah,
opinion.
yeah. And you don't have to meet on a daily basis. It could be a week in review every Sunday evening, or after the close, one of the days you're looking at a whole week's worth of here's the good, the bad, and the ugly. On my side, what about your side? I'm dealing with this issue. Have you ever dealt with this? I keep fighting the setup. I can't seem to execute the setup. Okay, get rid of it. It's clearly not a setup that you're comfortable with. So stop trying to trade it. Just because somebody else makes money off of it doesn't mean you should do it. JC, anything else?
Yes. I am trading CFDs on NASDAQ index, and I want to open a future broker account. How do I approach this? I am not familiar with futures brokers. Should I use EdgeClear as a beginner? Where should I go? From Bog.
Okay. So I'm the owner of EdgeClear. So there's a material conflict of interest, in my opinion, regarding this matter. But I'm going to tell you that pick a broker. Pick a broker. It doesn't have to be EdgeClear. Be nice if it were, but pick a broker. EdgeClear may not be a fit for you. Pick a broker. Make sure that you're not using a lot of leverage. Try to keep it to 50% of exchange margins. It is best if your broker has auto liquidation as a component of the service, meaning you set a limit, or at least they set a limit, and once you hit that limit, it liquidates and it locks your account for the day, and it's done. Just to help you kind of avoid being one of those people that just lose 90% of your account fighting a trend day. The things you need to watch out for with brokerage is what is the software that I'm using? Is it good? Is the data good? The commission, you can argue for commission based on your volume. That's fine. It is an actual cost. Commission is an actual cost. Margin is not. But commission is not the end all be all. Going to a broker who who's not proactive about your risk, is not proactive about providing service, might earn you a lower commission, and it might be a good solution for somebody who's completely independent and is experienced. But if you need a lot of help, you're gonna have to find someone who has somebody who you can talk to when you need help, right? It doesn't mean it's a free, all you can eat, call me whenever you want type of thing, but your broker is intended to be, as opposed to going directly to a clearing firm, a broker is supposed to facilitate your ability to trade reasonably. So that's going to be an important part of the decision process. But you have many different brokers that you can go to. They generally offer the same kind of thing, and you just have to be comfortable with the one you pick. Okay.
All right, on to the next one. In the video about how to grow a small trading account, Morad says that the statistical stop loss on NQ is around 30 points. But then to respect your ideal R factor of 2, you have to plan for an almost day trading 60 points target on NQ, right? Really?
Okay. So we're getting into some nuts and bolts here.
Yeah.
Let me pull up the rotations chart. So this is proprietary Convergent information that we put out to members every Sunday, and it looks at the prior week's rotations, and it tells us for these most popular products what the rotational values are. And so the NQ, it says 27 points, and it's blue because it increased from last week. So it's higher by some number. But right now, the normal rotation based on a 1 minute bar chart, looking back 20 sessions during RTH hours, which is in Chicago time, 8:30 to 3 p.m., and looking at a 3-bar setup, meaning 2 lower bars, 1 higher bar. If we have that structure, we consider that a high. And if we have it on the other side at the low, we consider that a low. And we measure, that's our swing. And we basically look at 30 days of 1 minute bar swings. We create a profile, and we're telling you that the value area of that profile is around 27 points. So this is saying, statistically speaking, it's saying on a 1 minute bar chart in RTH on the NQ over the last 20 sessions, which is 1 month, a 1 minute bar chart swings up to 27 points is considered normal. That's what we consider the band of noise, or the normal ebb and flow of the NQ. What does that mean? Are you able to trade the top and catch the bottom and stay outside of that 27 points by going 27 and a quarter points? No, it just means that at a minimum, this is how wide this thing operates on a normal basis, 68 or 70%, almost 70% of the time, or 1 standard deviation of the time, it's operating within 27 points. So if I'm taking a trade and the market's going sideways, and I want to stay outside of the noise, right? Then I have to look at that statistic and tell myself that if the market's doing this and I bought somewhere in here, okay? If the market's doing that, it can rotate 27 points this way above, and it can rotate 27 below. And that's where we then start to say, okay, this is not normal. It is actually breaking, okay? So trading within that, if I put my stop at 10 points, I am well within that sine wave of noise. So I have to stay outside of that. Is it realistic to stay outside of 27 points, which is what? How many ticks is that? 100 and something ticks, 128 ticks. It's a lot. So I use a factor of this, but I also don't trade in the middle of a band, of a sideways band. I try to look for a clear failure structure or a clear retest and break, something like that. I don't want to be in the middle of a band. But if I was to look strictly statistically, if I was using an algo and saying, hey, just trade randomly, flip a coin and trade randomly, my stop has to be that wide. And most people are well within that band and end up getting stopped. And then the other part of your question where you're saying, well, if I want an R factor of 2, that means I have to go for 54 points. Or in your example, my stop is 30 points. I have to go for 60 points. You have to go for 60 points on the trade. So if you're trading a 1 lot and your stop is 30 points, you're looking to be at 60 points. You want a high R factor. You want at least at, we say 1.5 or 2 R on your trades to really have a long-term outcome that is in your favor. 2 is good, but the answer to this depends on, are you scalping? What is your time frame? is your account able to trade that product and that size stop, and so on. For example, the S&P is at 7.25. It's been hovering around between 8.5 and 6, really. My stop in the S&P when it's at 8.5 or so is about 4 points. My stop when it starts to come in to like 7 or so is about 3 points. What is it for you, John? What are you using these days for stops?
So to be honest, today and yesterday, I was able to use about a 2.5 or a 3-point stop. Although there have been some days, and that's for me. I generally don't move my stops that much. It just seems like for the way that I trade, it kind of either works or it doesn't with those stops for the most part. However, the last several weeks, I would say there have been some days where I just had to really increase the stop to like 4.5 points, which is very unusual for me because I am feeling the effects of the expanding rotations. But today seemed to be a day that it was very choppy, but sometimes when it's choppy, the kind of order flow is pretty clear. I was okay with 2.5 or 3-point stops today, but in some recent action, I've had to go up to about 4-point stops, sometimes a little bit more, depending on what was going on. So it is increasing.
Yeah. So, to answer your question, it's really hard because we've got to look at what you're doing. But, I would tell you this as a rule of thumb, and this is something we talk about in the Accelerator program. I try to stay within about 60% of those rotations. I don't go below that. So 60% of 27 would be the lower threshold of an NQ stop for me. But I want to remind you that I'm using order flow for entries. I'm not entering in the middle of the range. And if you do trade, for example, if I trade the NQ at 27 and I use a 4-point stop, I'm toast. I'm going to have a tremendously high loss percentage. I have to be super accurate with my entries, and chances are I'm counting on luck for that trade to hold with that tight a stop in the NQ. So on the NQ, if you take 60% of that 27, that'll be the lower end of what my stop would be. In that case, it's about 16 points for the NQ. And again, chances are, if it's going to go 12 points, it's going to probably go through 16 points. If it's going to go through 16 points, chances are it'll go through 27 points. So my goal is not really to be accurate and precise and stuff with the market. My goal is to keep it to a place where it's wide enough that I can allow the market to work and coil and so on, but it's not so wide that it's going to take a lot of my account for a trade that gets stopped out. I know that seems huge, and I know the NQ is very popular because people are talking about it a lot. But in this kind of volatility, the NQ is not your friend. It's better to go to something like the RTY. It's better to go to something like the ES. Those have about the same. RTY right now is 40 ticks. The ES, what is that? 7.25. 29 ticks for a stop. They're pretty close. The Dow, as you see, is 44 ticks. The NQ is tremendous. It really it's not for everybody, but it's very popular. 108 ticks in the NQ. It's a lot. Okay.
All right. We have one from Zach. Recommended minimum account size based on 50% margin for micros and minis. That's the question. Is it based on 3 contract minimum trade size so you can take off risk with one and let the other run? Any general suggestions?
For the micros and minis, depending on the product. So I'm not sure which micro or mini you're talking about. They all have different margins, but let's just choose the most popular one, micro ES. You're looking at $1,600. The idea is you don't want to trade for less than full margin per contract. Doesn't mean that's how much margin I'm going to use, but if I'm funding an account, the minimum I want to put in is the full initial margin. That's the minimum. That's what I would suggest. So if you're going for 3, you're looking at $4,800 to $5,000. Still, you don't need to trade all of that every trade. You can use 50% margin intraday. You have to have the full margin to hold it through the close that just happened, 4 o'clock Central, 5 Eastern. But intraday, you can probably trade 3 for, $5,000. Again, the recommended margin, the recommended amount to post at a minimum is full margin. And that gives you a little bit of room for losses as you learn, but still trade the 3 lots. I wouldn't go much less than that. I know there are brokers out there that'll open a micro for $50, something like that. I think that's suicidal, but that's just me.
All right. Then we just have a comment. Thanks a lot for this very detailed answer. Very nice of you guys. There is one question, but you might have gone over it a little bit when you talked about the NQ, and actually I have an answer prepared. What is the average decent daily performance in points on the NQ? I believe it's 115 points to 300 points for a standard deviation. First standard.
Well, they're talking about daily performance. John, how would you answer? What should my daily performance be on the NQ in terms of points?
Sorry, good question.
Oh, they're asking what their daily performance should be.
What they should go for.
You know what? There's no way to answer that question. What your daily performance should be. A little bit better than you were last year. That's the only answer I can give without knowing more what someone's daily performance. Am I?
That's a good answer, actually. A little bit better.
A little bit better than last year.
So the person who asked that, I'm going to throw you an analogy here. It's like going to somebody who is an expert car driver and saying, what is a good car? What is a good car for me? And it just, there's so much that goes into it. What is this for? Is it a commuter? Is it just you, or do you have 5 kids? Do you need a minivan? Do you need a pickup truck? Are you in a business that requires you to move tools around? There's so many factors. So to answer for the NQ, we would have to ask, what is your time frame? What types of setups are you going for? And so on and so forth. But honestly, the best answer is what John gave. It's a little bit better than wherever you were yesterday and wherever you are today. That's the performance you're shooting for. It's because it's really about you and your setups and what you're doing. So just remember that it's not really a one size fits all. Like I can't tell you, oh, if you're not extracting at least 100 points a day out of the NQ or MNQ, then it's not worth it. I have no idea. You might have a swing system that trades 3 times a week. You might be someone who's scalping 50 times a day. I have no idea. It's really hard to answer that. So it's you can see, like from this table, actually, one of the stats is how many rotations per session. So we look at the number of rotations, we look at the number of available rotations for the session, and we know that, for example, on average over the last 20 sessions, we had about 39 full rotations per session. How many of those rotations can you capture? How many of those rotations might you have had a setup? Maybe 10% of those, so maybe you had 4 setups, and if you got 4 setups and you went for 10 points a setup, that might give you a starting target. It's we emphasize, as professional traders, we emphasize statistics. So you need to look at what would your statistics be and apply that. Is there anything else, JC?
No, that covers everything.
Okay, I want to leave you, thank you for all the questions. I want to leave you with this last piece. We're approaching an hour. We do this thing, one of the key pieces to Convergent Trading is the Accelerator program. It is a program, an intensive program of about 5 weeks. And during this program, we go through everything that a prop trader needs to learn to work towards becoming a professional trader. It is covered by John and I. And the next cohort starts next Wednesday, actually. It lasts 5 weeks. 4 of those weeks, you will do self-study. You'll get a module. You have to study it. And those are 2 times, you'll get 2 modules a week that you have to study. Then we have a coaching session every week. And then the last week, we do live trading. And we do what's basically a trader bite in the morning. And then we do live trading for the first 2.5 hours after the open. And we later in the afternoon come back and do workshops and also talk about what we did that morning. Again, this starts the next cohort starts next Wednesday. There's a promo that's happening just for this webinar. You won't find it on the website anywhere. If you point your browser to go to ct.pro/accelerator 2025, you might want to just drop that in there, JC, and use promo code AP250. The next 5 signups, which actually caps this cohort. At that point, we'll just stop taking signups. If you put that code in, it gives you $250 off, I think, of the program. So consider that, check that out, and we hope to catch you in there. That's it. I don't think we have any more questions that we didn't answer, JC, right?
There is nothing remaining.
Very cool. Thank you all for attending. Again, check out the Accelerator program. This is the focus for us right now. We're building a community of traders that have gone through that program. If not, be sure to at least join for the quarter and do the Trade Right program, which is included. And hopefully this can set you off on a much stronger 2025. Hopefully you gained something today from John and I and the questions that were answered, and we leave you with our best wishes for 2025 on your performance. Just hang in there, take it slow, and hopefully the results will show. Thank you, John, for being here and for answering these questions.
My pleasure, FT.
Cheers, guys. Take care. Thank you all.
Thank you, everybody. Have a good day.
Thanks, everybody.